Hey everyone, it's Alan back again with another video, and today I'm going to be kicking off a new video series on my channel, starting with this video presenting the current top 5 highest yielding Dividend Aristocrat stocks, and then it's going to be my intention to make a separate video for each of these 5 companies and do a more in-depth look into each of them. My goal is to upload one of these videos a week, and I'll continue to make other videos all the while about other dividend related topics and holdings. So if that sounds interesting to you, please consider hitting the subscribe button to stay on top of each new video. For those of you who might not be familiar, a Dividend Aristocrat is a stock that has a history of consistently growing its dividend over a long period of time. In order to qualify as an aristocrat, a company must consistently increase their dividend for at least 25 consecutive years, as well as be a part of the S&P 500. Being known as a Dividend Aristocrat carries a lot of prestige for a company, as it's not an easy thing to achieve since it takes a minimum of 25 years, as well as having enough cash on hand to continue to increase their dividend payouts in order to attain that status. Companies that are a part of this elite group are usually viewed in higher regards by investors as being safer, and these stocks are often less volatile than other stocks. Granted, with all investing there is some risk, but stocks in this group are generally viewed as safer because usually companies that can increase their dividends over a long period of time are leaders in their industry. And on top of that, companies that are able to achieve this feat don't want to lose it since it takes so long to regain that status. Some of you might remember what happened to GE. They were a Dividend Aristocrat after consistently raising their dividends for 32 years until they fell on hard times, and they ended up having to cut it down to 1 cent per share a few years back. As of the making of this video, there's roughly 65 stocks that are a member of this group. And so what I did was I checked every single one to find out which of these have the highest dividend yields as of right now. So for your reference, I'm going to be presenting the top 5 highest yielding stocks that are also Dividend Aristocrats, in order of dividend yield from smallest to largest. So with that being said, let's get started. At number 5 on our list is the Chevron Corporation, ticker symbol CVX. Through its subsidiaries, Chevron is engaged in integrated energy, chemicals, and petroleum operations worldwide. The company operates in 2 different segments, upstream and downstream. The upstream segment is involved in the exploration, development, and production of crude oil and natural gas, processing, transportation, and regasification associated with liquefied natural gas. The downstream segment engages in refining crude oil into petroleum products, marketing crude oil, refined products and lubricants, transporting crude oil, and refined products through pipeline, marine vessel, motor equipment, and rail car. Chevron Corporation is also involved in the cash management and debt financing activities, insurance operations, real estate activities, and technology businesses. Chevron was founded in 1879 and they're headquartered in San Ramon, California. This stock is currently trading at $107.64 per share, and it has a dividend yield of 4.64%. Chevron has continued to increase their dividend for 33 years, which makes them a Dividend Aristocrat. They're one of the few oil and gas companies that did not have to cut their dividends during the 2008 financial crisis, making them stand out in the energy sector as a solid company. So it's no secret that the oil and gas industries have been heavily criticized in the last numerous decades, with so many countries pushing for greener energy sources such as wind and solar power. But with all of these controversies going on, there are still some good things going on in this sector that make companies like Chevron still worthy of consideration. Despite what some investors may think, worldwide there is a growing demand for Chevron's products. What else is nice is on top of that, Chevron has been investing hundreds of millions of dollars into renewables that support their operations. Chevron is also well known for having much fewer oil spills and mishaps than their competitors like BP, Shell, and Total SE. So definitely don't exclude companies like Chevron when deciding what dividend stocks to hold in your portfolio. Chevron pays a quarterly dividend, with their last declared date being January 27th of this year, and paid $1.29 per share. In addition, this stock is currently up 37.02% from this time 6 months ago, and it's up nearly 54.43% from this time a year ago. So overall, in regards to this stock's performance, it's been continuing to recover from the COVID pandemic pretty well. At number 4, we have AbbVie Incorporated, ticker symbol ABBV. AbbVie discovers, develops, manufactures, and sells pharmaceuticals around the world, including Humira, which is used to treat arthritis and plaque psoriasis. They also create other treatments for infections, Parkinson's, hypertension, chronic constipation, as well as others. AbbVie is headquartered in North Chicago and was founded in 2012. The reason why they're considered to be a Dividend Aristocrat is because AbbVie is a spinoff of Abbott Laboratories, which is also a Dividend Aristocrat. So AbbVie is always considered to be an aristocrat themselves from everywhere I've seen. Right now, ABBV is currently trading at $110.84 a share and has a dividend yield of 4.81%. They've continued to increase their dividends consistently since 2012, with it being at $1.30 per share. Their stock also performed really well during the COVID pandemic back in March of 2020, with it only taking about 2 months for their share price to fully recover, and it's still doing very well to this day. Dividend investors might not be too familiar with biotech and pharmaceutical companies, as most dividend stock investors tend to go towards companies that are in the consumer staple sector, like Johnson & Johnson or Procter & Gamble, for example. But AbbVie definitely shouldn't be overlooked when it comes to providing solid returns and growth. AbbVie is a company that's huge on research and development, which isn't a surprise as biomedical companies are always working on new medicines and treatments for different ailments, as AbbVie continues to launch new products and currently has 32 listed on their website as of the making of this video. What they also do is they use their existing treatments to expand them into new treatment areas, which helps diversify their product line. Their website also states that over 52 million people use their products every year in over 175 different countries. Their stock's performance has been excellent given the current landscape. Their stock is up 51.79% compared to this time a year ago, and it's up over 100% from this time 5 years ago. Earnings for AbbVie continue to climb every year, and it currently holds a bullish rating from Wall Street analysts in regards to its performance. Now at number 3, we have International Business Machines, otherwise known as IBM, ticker symbol IBM. IBM produces and sells computer hardware, middleware, and software, and provides hosting and consulting services in areas ranging from mainframe computers to nanotechnology. IBM is also a major research organization, holding the record for the most U.S. patents generated by a business for 28 consecutive years. They were founded in 1911 and they're headquartered in Armonk, New York. Unlike the past 2 stocks on this list, IBM's performance hasn't been very good recently. It's currently trading at $128.24 a share, and it has a dividend yield of 5.11%, with their last dividend paying out at $1.63 per share. IBM also just became a Dividend Aristocrat a year ago, having increased their dividend every year for 25 years. But despite that, IBM's stock performance has been on a downward trend since 2013. Granted, compared to this time a year ago, their stock is up over 20%, it's still down 12.79% from this time 5 years ago, and it's down 16.82% from this time 10 years ago. In 2013, this stock was trading at over $211 per share, compared to where it is now at $128.24 per share. Hopefully their recent performance will continue into the future, though. Right now, IBM is really focused on cloud computing. Formerly being known for their hardware decades and decades ago, they're now trying to move full steam ahead into newer sectors to try to maintain their dominance in computing. They're currently in the process of a multi-year transformation, which is being accelerated with IBM purchasing Red Hat, which is a software company that provides open source software to enterprises. Despite everything going on with IBM, Wall Street hasn't been as optimistic about this company when compared to the others we've looked at on this list. Year-end revenue for IBM hasn't seen an increase since 2018 according to Yahoo Finance, and leans towards a hold rating as opposed to buy or strong buy rating. We'll definitely have to wait and see if IBM's transformation is able to produce stellar returns for them in the future. At number 2, we have Exxon Mobil, ticker symbol XOM. Exxon explores for and produces crude oil and natural gas in the United States and internationally. It operates through upstream, downstream, and chemical segments. The company is also involved in the manufacture, trade, transport, and sale of crude oil, natural gas, petroleum products, and other specialty products, and currently has over 22,000 wells. They were founded in 1870 and are based in Irving, Texas. Exxon stock has been performing very well this year, with XOM being up over 71% from this time a year ago. It's currently trading at $59.11 per share and currently has a dividend yield of 5.62%. Their last dividend was declared on January 27th and was for 87 cents per share. Exxon has increased their dividends for more than 30 years, easily making them a dividend aristocrat. Exxon's one of the largest publicly traded energy providers and chemical manufacturers, and develops and applies next-generation technologies to help meet the world's growing need for energy and chemical products. They sell over 5.4 million barrels per day of petroleum products and offer a large catalog of lubricants for vehicles, airliners, industrial machinery, and marine vessels. So they do have a good diversified portfolio of products, which is always a good thing. A lot of oil company stocks have been performing pretty well as of recently, and I suspect the reason why might be because of rising fuel costs we're experiencing. Just like I mentioned with Chevron, there's still a huge demand for the products that Exxon is offering, and it looks like these companies are definitely sticking around. So I wouldn't be so quick to disregard this sector, especially if you're looking for some good dividend payouts. Now, before I get to number 1 on this list, if this video has benefited you in any sort of way, please consider clicking the like button below and also subscribing to the channel for more aggressive dividend investing videos. Dividend Bull revolves around content relating to high dividend paying stocks, ETFs, closed-end funds, alternatives, and many other vehicles that can provide a large amount of passive income. If that sounds interesting to you, hit the subscribe button to stay up to date on the latest content. Thank you all so much for your consideration. Finally, at number 1, we have AT&T, ticker symbol T. AT&T provides telecommunication, media, and technology services worldwide. The company operates through communications, Warner Media, and Latin America segments. AT&T offers wireless voice and data communication services, video and targeted advertising services, as well as broadband services. AT&T was incorporated in 1983 and is headquartered in Dallas, Texas. AT&T's stock performance hasn't been too great recently, with it being down roughly 4.46% from this time a year ago, and it's down 22% from this time 5 years ago. Yet despite that, AT&T has raised their dividends for 36 consecutive years, with their last dividend being declared on December 11th for 52 cents per share. AT&T is the 9th largest company in the United States and is currently the world's largest telecommunications company. They're also one of the largest providers of mobile telephone services and the largest provider of fixed telephone services in the United States. In 2019, the company generated over $180 billion in revenue. Lately, AT&T has been focused on expanding their 5G coverage to consumers and small businesses, as well as growing their streaming service, HBO Max, which has seen a significant amount of growth in recent months. According to their 2021 Analyst and Investor Day presentation, AT&T is expecting to expand HBO Max into 60 additional markets by the end of this year, as well as introduce a membership that supports ads, which is expected to generate more revenue for the company. In total, they project to have 120 million HBO Max customers by 2025. Despite all the progress AT&T is making, many investors still seem skeptical given this stock's recent performance. It should be noted, though, that the CEO of AT&T, John Stankey, recently appeared on CNBC and gave investors some reassuring news. According to Stankey, the company has no intention of cutting its dividend into the foreseeable future, and that they can even continue to pay at its current rate, which is a really good thing. In my opinion, given what the CEO just recently said on CNBC and this stock's long history of increasing its dividends, I definitely think it's worth considering and keeping our eyes on into the future. Okay guys, that's going to wrap up today's video. Thank you all so much for watching, I really do appreciate it. If this video benefited you in any sort of way, please click the thumbs up button below, and also feel free to subscribe to the channel for more content revolving around high dividend stocks and ETFs. Okay, thanks again guys, and I'll catch you next time. Take care.